doji. I need to get long. Where's my risk factor? The thought process that you now have is helping you to speed up the analytical process and will help eliminate the fear associated with that hesitation is associated with. I know mechanically this happens, get long, place stop here, enter order, hurry. Right? Very good. Again, here we have a tweezer bottom. Not quite equal and opposite, but yet tweezer bottom. It's not a great chopstick pattern, but it is a perfect tweezer bottom. So sometimes we see, again, it is an equal and opposite, is it not? It is not quite equal, but it's definitely opposite in color, almost in shape, but it definitely is a tweezer bottom. So you want to pay attention to those tweezer bottoms. Once again, if you see that tweezer bottom, we want to know when we can start looking to go long. By the way, notice what we have here, weekly and monthly support targets. Wow. So we're at a confluence of support and pivot points, and we went over that in the first CD. So there's certain patterns that you can follow and focus on. Failed doji top, market takes off, market rallies. By the way, this is our weekly resistance at 118.55. This was a low that actually occurred in the euro currency in 2005. One of the more prominent markets that we have occur is the again, sideways channel in Forex markets. We see the Forex market because of the different trading sessions and, of course, waiting for news and waiting for different bank session hours or bankers to trade. And also there's certain things that, banks and the Federal Reserve and central banks set overnight lending rates, broker loan rates. Money has to flow, and there's certain demands and constraints on money supplies that are made. And so therefore, people are waiting, and that's what we get these pausing periods, and we see what we call a sideways channel develop. Some people find them very difficult and very challenging to trade through, but there's a few secrets and nuances that we can cover in this trading course that I think will help you out. Again, the key to focus on is the longer a channel is, the higher the odds are that it's getting ready to move. And once it does, the bigger the potential breakout. If the breakout fails immediately, it is a good reversal trigger, rule number one, if you want to see immediate results with higher closing highs. So in essence, if we're in a sideways channel and the market finally breaks out, and my rule of thumb is I look for 2 closes above the channel, and then I want to see immediate results ensue. And we should start to see immediate results, and the market should, as it develops possibly another channel, we want to see 1, 2 closes above. By the way, another high close doji as we see here. But we see, as you see the doji right here, high close doji ensues. The market not only once, but twice stays above its breakout range. And we want to see positive momentum develop immediately, not 4 days later. After a long sideways trend is developed, by the way, when you see a doji appear, heighten your awareness. Again, heighten your awareness when you see a doji in a sideways channel, especially when one has never appeared before. So you want to watch for a higher closing high above the doji high for a trigger to go long, and the opposite is true for a trigger to go short. So, based on what we've been talking about so far, let's take a look at this chart. We see that the market in the euro currency, in the spot Forex, we see it in a downtrend, it goes in an uptrend, and then we're in a consolidation phase. Now, here's the thing about trading that we don't know about, and there's 3 phases a market goes through. It goes from trend, it can either reverse the trend, it goes in consolidation. We're either going to continue the current trend, which in this case is up, all right? And so basically, let's get our pen out. We're in an uptrend. The market goes in consolidation. I don't know if the market's going to resume the uptrend or reverse the uptrend, do we? But here we have a doji. And let's look. Where in our charts has a doji showed up before? Nowhere. So what we want to do is heighten our awareness to if a market closes above or closes below the doji low. If we get a close above the doji high, that's going to give me a clue that the market's going to go up, and I want to use a stop close only below that doji low. If the market closes below the doji low, I have a clue that the market's probably going to go down, and I want to place a stop close only above the doji high. So that's what we're really shooting for when we see sideways channels. We're looking for clues as to what the market